Excellent. Well, hello, everyone. I'm Ariel Steele with Tax Credit Connection, and I'm joined today with Fonda Apostolopoulos from the Colorado Department of Public Health and Environment. And we're here to talk about the environmental remediation tax credits that we have here in Colorado. So Fonda will be starting, and I will jump in afterwards. So one moment.
Well, thank you, Ariel. Hi, my name's Fonda Apostolopoulos, Colorado Department of Public Health and Environment, and I'm the Voluntary Cleanup Coordinator for the state of Colorado. So why are we here today? We're here to talk about the brownfields tax credits that we have here in Colorado that help with pay for redevelopment of distressed properties. I always tell people, I said, there's not a philanthropist out there that cleans up these properties to feel good. They do it to make money. And I've always told people, as long as you do it right, I will work with you, help you to get these properties redeveloped and go on from there. So we're going to talk about the brownfields tax credits and the voluntary cleanup program, how they work hand in hand. So the tax credits in these cases here really kind of make or break a deal. A lot of these properties have problems where it's just not going to, it just can't ink in place where, but if you perform the cleanup and the tax credits, a lot of times he's able to make the difference of either the property being in the black or the red. And then we're going to talk about also what you have to do to qualify the tax credits and how to apply for the brownfield tax credits. So what's this all about? So basically, this is a generous opportunity we have here in Colorado where we have tax credits that are instituted through the voluntary cleanup program. So if you, the state has credits of up to $525,000 or $675,000 for rural properties of less than 50,000 people, if you spend up to $1.5 million worth of tax credits, or worth of cleanup, excuse me. And then landowners can, what's nice about it also, if you don't have a state tax liability, the landowners can use the credits for cash. You can sell them on the open market. And we'll talk a little more about details on that too. So what's the voluntary cleanup program? It's basically a mechanism for the private sector to deal with environmental problems in a timely fashion. State basically helps frustrated landowners deal with perceived environmental issues. And most time people come here is because a property's had a phase one of the property, which is a history of the property, and they've recognized some type of environmental concern, and banks want to make sure those concerns are being taken care of. And so that's what our program is kind of set up for. So what are the tax credits? So it's basically used against state tax dollar for dollar. So similar to a gift certificate. So in other words, if you have a state tax liability and you got tax credits, you can use that towards your, basically use it towards the deduction of your state tax liability is. Also, what's nice about it too is that you can actually roll over up to 5 years. So how do you get involved? How does a voluntary cleanup program work? It's basically the site needs to be fully characterized. So you've got to look at the soil, groundwater, indoor air possibilities too. The key is you have to have the whole property characterized. You can't just say, I want to deal with one thing. The whole property needs to be clean. It's similar to a phase one and phase two. The phase one is history of property, and the phase two are the environmental data that was taken, either soil, groundwater, indoor air. And then either based upon the phase one and phase two, either the property needs to be cleaned or it doesn't. If it doesn't need to be cleaned, we go straight to a no action determination. If it does, you submit an application with a fee for our time, and then we review the fee. And then what's nice about it also is that these properties are cleaned up under your supervision of your qualified environmental consultant. In other words, you're not going to be paying for us to be out there. You're only paying for the application fee for us to review the application and to make sure everything's in order. So here's a kind of example of a property that needs to be, that's been fully characterized. There's at least up gradient and down gradient monitoring wells. You've got soil characterization. There's old underground tanks that have been taken care of, things like that. So based upon what the recognized environmental concerns are from the phase one, the phase two is addressing, looking at, okay, we knew there were tanks here. We're going to put wells here. We knew and check the soil and groundwater. We want to make sure nothing's leaving the property also. So it really is about a full You know, you got to have the entire property looked at. So how does VCAP help you with contaminated properties? The nice thing about it is you've got a 45-day review application time. So once we get the application, we have 45 days to review it. A lot of times we can go less than that, but we will not go less than 3 weeks. And then at the same time is if you have not given a full characterization, we may ask for more time because we're going to ask for more information. It also allows for cleanup of what the proposed land use is. In other words, if it's a residential property, you clean up residential. If it's commercial, you clean up to commercial standards. And what's also nice about it is that if you come through our program, there's a memorandum of understanding with EPA where once you're certified and put a notice, the EPA will not overfile on your property. And it's truly voluntary. We ask people, we encourage people to come in and come talk to us so that you know exactly what we expect. And at the same time is, you can give me a phantom property without an address, just give me data and I'll tell you what we need to do. Because we understand that people are sometimes hesitant to come talk to the state. So why did it come about? This is a really example of in the pretty much the early late 90s. This property here was an old tire shop in Frisco, Colorado. It was on the main street, and somebody wanted to turn into a bistro. Phase one came back that they had underground tanks that had some oils in it. They wanted to get it cleaned up, but it didn't fall under any category. It wasn't underground storage tanks where OPS would be involved. It wasn't a RCRA site. It wasn't a Superfund. It wasn't solid waste. So they came to us and asked me, what do they need to do to be able to get a clean bill of health? We told them what they need to do. They spent 70 grand on the cleanup. And then once the cleanup was performed and they certified it, we worked with the people to get the national determination, and the bank financed the property. So why is this so important? It really makes economic sense. Now remember, Frisco is a small town, and it gave really big benefits. You got a town of less than 1,000 people, and what did it do? It increased tax revenue by city tax revenue by 18,000, county tax revenue by 23,000, school district by almost 2 grand, employing 8 new jobs in a town of 1,000 people. That's huge. And then it also increased average wage by $1,200. And then also construction spending, $250,000. New investments, so the capital improvements altogether. So you've got $375,000 worth of capital improvements and 8 new jobs. So how does it work? So buyers of development land want to have the lowest cost. So a clean land is cheaper to build than contaminated land. So cities want contaminated land cleaned up and redeveloped for obvious reasons. And the money coming back from tax credits makes the difference in redevelopment of these possibilities. In other words, the infill is always more difficult. People always want the clean properties, but these tax credits, as you'll see in a second, is why these tax credits make economic sense. So you have 2 properties. So you got clean versus infill, no tax credits. So you've got $1 million property versus $800,000 property that has the infill. The infill property needs $300,000 to clean it up, and the clean property needs $1 million. So basically, the infill property costs $1.1 million versus the clean. And then development builds outside. So development is basically going to do it outside of town because it's cheaper. So this is how it actually works. So you have $1 million property runs it, and then versus $800,000 purchase property for the land infill. Infill property has $300,000 cleanup. The cleanup is $120,000. Actually gets $120,000 back in tax credits based upon their calculation, and then you can sell the tax credits at 85% basically, which just means $102,000. So you basically are going to have a clean property. This property here is going to be cheaper versus the clean property overall. So you have $1 million versus $998,000, and you've got an infill, which is typically going to be in a better location also. And now you've got an even playing field in the sense that we've given the incentives for people to clean up these infills. That's what we want to do. And we kind of talk about the impact here. It's kind of a graph that you kind of look over here a little bit. It talks about always the same price for the infill property versus the other property and what the differences are. So requirement to clean up tax credits to qualify for tax credits.
I think this might be where.
Yeah, and from there, this is where Ariel is going to kind of step in and kind of work on
Grab your seat.
Okay, it's going to be a hot seat, so get ready.
All right, I'm going to be in the hot seat. I like it. Okay, yeah, we're in this conference room and there's these like shiny boards over here that are probably gonna make a bad background. So really excited to have Fonda here. And when he said that, he's here with the government and he wants to help and he wants to meet with you and he'll talk to you about your hypothetical project, he's completely right. I've sat in conference rooms over at CDPHE's offices with him multiple times and gone over plans and figured out what's going to work for people. And he really, truly does want to help. So we could not be happier to have such a great person at the state working with us on this program. Okay, so as you heard, the first step is to apply for the VCUP program, the voluntary cleanup program. And when you apply, if you want the tax credits, you submit a letter requesting the tax credit at the time you submit your VCUP application. And then meet with the program manager, this amazing gentleman we have right over here, to talk about the requirements and see what's really important on your property. Sometimes it's really surprising what things do qualify, or sometimes maybe even what things don't qualify. So it's good to have that conversation early to make sure you're using the program perfectly. So in order to qualify, you have to be a Colorado taxpayer or a qualified entity. And with the legislation that was just passed earlier this year, it expanded the definition of qualified entity a little bit. So we now include school districts, special districts, institutions of higher education, and other quasi-governmental entities. It used to be limited to counties, towns, cities, and so now it's been expanded to basically all of the quasi-governmental entities. So it's really what we intended, but we just didn't draft it that way back in 2014. And the property has to be located in the state of Colorado. That seems pretty obvious, but sometimes you have properties that straddle to state lines. And if you do have a property that's on the Colorado-New Mexico line, only the Colorado part is going to count. So the rest of the requirements, you submit certification that your plan was fully implemented. So you create the voluntary cleanup plan, you do the work, then you submit saying we've completed it, and that's where your environmental consultant comes in to verify that you did everything you're supposed to do. And then the state will issue a no action determination letter. And then that you'll be submitting the cost of your cleanup, which would include your invoices, canceled checks, or other kinds of, nobody uses checks these days, but other kinds of documentation showing you paid. What CDPHE doesn't want to do is to give you tax credits if you didn't pay your contractors. So you have to prove that you actually paid them. At that point, CDPHE will do the following. They will review the costs within 45 days, which I will mention this is the fastest of all the tax credits we work with. So we appreciate that about working with them. They may request additional information if your invoices weren't very clear and they can't tell which part was for remediation and which part was for general construction. They might ask for some additional information. And then once they've gone through all of that, they'll issue a letter certifying the amount of qualified expenses and the resulting tax credit. And that letter gets sent to the Department of Revenue and to the property owner. So that's basically your certificate showing that you have your tax credit. How are they calculated? So you look at your applicable qualified costs, which is your samples of soil, groundwater, indoor air, the actual remediation work that you do, the removal of the soil, the vapor barrier that you might put in, all those kinds of things. It can include setting up your remediation trailers, your post VCUP approval of additional groundwater wells. So it doesn't cover the things that you do to determine whether you need to go through the VCUP program, but once you've been approved with the VCUP program, all of your wells and monitoring is going to be covered. And then your no action determination certification report that your consultant prepares. Then there's things that don't qualify. So things that don't qualify is the phase 1 and phase 2, because those are done in order to determine whether you have a problem or not. Your attorneys and accountant fees, those are considered soft costs that don't qualify, and your application fees do not qualify either. And then if you did work prior to your VCUP, that typically doesn't qualify. If you have some really extenuating circumstances, talk to the state about it. But in general, that work is not going to be qualified for tax credits either. All right. And then anything that's just for a normal construction site, those are not going to qualify. So there you go. So then how do we calculate the tax credits? We're going to start with urban And this is what the formula was up until this year when we passed the law that gave an incentive to rural. So the VCUP cleanup work for urban communities, which again, as Fonda mentioned, are communities of 50,000 or greater. Those are based on 40% of the first $750,000 in qualified costs, plus 30% of the next $750,000. So I'll give you an example so you can see how these numbers work. Let's say that you have $1 million in qualified costs. The first $750,000, you'll get 40% or $300,000. And then there's an additional $250,000 to get to that $1 million number. Those are at 30%. So that's going to give you $75,000 for a total brownfield credit of $375,000. And again, this is in an urban area. And so if you're in a rural area, the formula is 10% higher. So it's 50% of the first 750,000 and then 40% of the next 750,000 in costs. And the reason we did this is because for any of you who are in rural communities, you know, it's number one, hard to get contractors to come out at all. And number two, when you do get contractors to come out and work in your community, they charge more. It's really expensive to bring someone across the state with all their equipment to do the work. And in addition to all that, you know, over the last 10 or 12 years, while the Front Range has been recovering very nicely from the 2008 through 2011 economic downturn, the rural areas haven't had as strong of a recovery as the urban areas have. So this is also a way to give a little bit bigger incentive to the parts of the state that need that incentive the most. So in case you're in an urban area and you're saying, why the heck don't I get this better formula? You're actually probably having a cheaper cleanup just because of where you're located. So here's how it will work for the rural areas. Same example of $1 million in qualified costs. 50% of the first 750,000, which is 375,000. And then 40% of the 250,000 remaining, which gives you 100,000. So that gives you a total of a $475,000 brownfield tax credit. So in this example, they're getting $100,000 more than in the urban areas, which will probably get eaten up in the costs. So how property owners can use their brownfield tax credits. So once you get these credits, what the heck do you do with them? Well, the first thing is always use the credits against your own tax liability, and you have up to 5 years to do that. So, you know, sometimes, as we talked about qualified entities, they're not going to ever have a tax liability. But if it is a private company or a private individual, definitely talk to your accountant about keeping credits for your own use. It's the best value. Even though we sell them, we want you to know the best value is use them yourself. You can also transfer some or all of your credits, depending on whether you can use some, to another taxpayer. And if you work with our company, you'll receive 85% of face value for that transfer. So here's an example, $100,000 tax credit, sell to a buyer, and you receive $85,000 in cash. It's really that simple. The hard part is getting your environmental work done. The easy part is working with us to sell your tax credits. We have a list of buyers ready to buy at any given moment, and we can get the whole thing done in 2 to 3 weeks to where you have the cash in your pocket. So it's nice that when you get to the end of the process, it gets easier. So here's the rules around selling the tax credits. You can sell them up to April 15th for use against the buyer's tax liability for the prior year. So again, I like to give examples so that all these words make some sense. You get your letter October 28th, 2021. Credits can be sold up to April 15th of 2022, and the buyer could use them for their 2021 taxes. So you have up until that tax deadline, the original tax deadline, to purchase credits for that year's use. And again, I just want to remind everyone, you can sell all of them or just sell some and keep the rest to use for your own tax bill. Okay, why do people buy tax credits? People are always curious about that, even if they're not thinking about buying them. And so people buy them at a discount. And with our company, at least, the rate varies based on the time of year. And so the credits are used towards their taxes on a dollar for dollar basis, as Fonda mentioned earlier. So if they owe $10,000 in taxes, they can buy $10,000 worth of credits and pay their tax bill with it. And so they can plan ahead, and if they know that they're going to be buying tax credits, they don't need to make their quarterly payments throughout the year. So they can have their money working for them all year long. And that sounded like kind of a funny concept until about 4 or 5 months ago when interest rates went up. I know my interest I was getting when I had my money sitting there was about 2 cents every month. Now I'm actually getting a couple dollars. So anyhow, but people do have ways that they can use their money to work for them throughout the year instead of making those quarterly payments. So here's an example, $100,000 tax credit. The buyer buys it in October for 93%, and they pay $93,000. They save $7,000 on their tax bill. So, and there's a nice little picture. So why did the seller get 85% or 85,000 and the buyer paid 93,000? The difference is how our company gets paid or any other broker gets paid for putting the transaction together. So why the heck do we get paid? Here's what we do. Brokers review and assist with the letter requesting the credits if you'd like help with that. We will be happy to look over your documentation showing your qualified expenses and make sure it all makes sense. We guide the buyers and sellers through the process and take care of all the details. And we help the accountants with the required tax forms. And now we have a program where we actually will be submitting to the state to get a new buyer certificate issued. And we also have a list of buyers that are ready to go that we've worked for years and years to get established. And that is, for many people, a big benefit to know that their credits can be sold right away. So that's why we get paid. So hopefully that helps to explain the differences in the pricing. So federal income tax liability for selling tax credits. So if you sell your tax credits, unfortunately, you have to pay taxes on that income. And so the income has been considered, oh, I thought we took this out. So the income is considered a short-term capital gain if you've held the credits for less than a year. And if you hold the credits for over a year, it's a long-term capital gain. So getting a little bit into the weeds, but we are always happy to talk to you and your accountant about the best timing for when to sell your tax credits. That's a big value of ours, is to make sure we're helping you to time your credits in a way that makes the least tax burden on you. Okay, there's a tax credit cap every year. And so starting with 2014, there's a cap, and it was in 2022, this year, it was increased to $5 million a year. It was $3 million a year. So 2 million of that 5 million are earmarked for rural projects. So basically, if you're doing an urban project, there's a $3 million cap statewide per year, and then there's an extra 2 million for rural. If you do a rural project and all the 2 million are used up, you can use the other funds as well for rural projects. We just haven't had that many rural projects yet. If all the credits aren't issued in a given year, they go away. So unfortunately, it's not like one of our other programs where they get carried forward. They don't. So it's important that we make sure we use them all every year. And the certificates are issued first come, first serve. So you want to make sure you let Fonda know right away if you're interested in credits for any given year. So for credits to be issued for 2022, the work has to have been completed in 22 and the invoices and payments made. So there may still be some more 2022 credits issued. I don't know, this late in the year, maybe we're all done now that it's already September, but they don't all have to be issued by December 31st. It's based on when the work was done. And then, as I mentioned, the program is extended for 2 more years. So we have it until January 1st of 2025. And spoiler, I will let you know that we are planning to go in 2024 to ask for it to be extended for 6 to 8 more years. So we will hopefully have better success in that part. We're just very happy to have had the program extended and have it increased. And so rural communities get more credits, as well as there being a bigger pot to take those credits from. So that was a good win, and we hopefully will have another win to extend it for a longer number of years. Also, the new legislation means that buyers receive their own certificate, which is really exciting, that they'll be able to have that and not have to worry about Department of Revenue marrying the seller's tax return with the buyer's tax return, which As you can imagine, all the tax returns that are sitting at the state of Colorado, that is definitely finding a needle in the haystack to bring those two tax returns together. So a quick little recap. Private, nonprofit, and most government and quasi-governmental entities now qualify for these tax credits. And the new legislation creates even better incentives for rural projects, which we're really excited to help our rural neighbors. Oh, and then we have a little button up at the top. So, and the credits can be sold for cash, which is a huge incentive for, especially for the nonprofits and government agencies, and even for for-profit entities that just don't have quite that much income to be able to use all the credits themselves. So here's all of our contact information so that if you have questions, we would love for you to reach out to us. And I'll just check and see if Fonda had anything else you'd like to add.
No, the one thing I want to make sure people understand is that, and there's actually guidance on that also, as far as if you go on the state web page on the brownfields, we have some guidance documents that talk about you have to be part of the voluntary cleanup program, and you have to tell us before you start remediation. You can't just do it after the fact, things like that. So you really got to work with us and communicate with us.
Great. Yes, communicate with CDPHE early and often. And we here at Tax Credit Connection are happy to join you in those conversations and be a second set of ears and eyes there to make sure that we remember everything Fonda told us and we make sure we do everything the way they asked. So please reach out to either of us at any time. We'd love to talk to you more. And thank you so much for participating today.